Now to Wall Street, which is recovering from the most volatile week in the market's history. On Friday, the Dow finished with a gain of 125 points. This followed 4 days of wild 400-plus point swings. And by the end of the week, the market, it only finished off, in context, 175 points, about 1.5%. And joining us to make sense of this roller coaster ride is Michael Santoli, senior editor for Barron. Great to have you with us, Michael.
Morning.
So people are looking at this market, and they see the wild, the dramatic, everyday swings.
Yes.
But at the end of the day, it's 175 points to the downside.
Exactly.
Can you say the worst is behind us at this point?
You know, I don't think we're going to have a long stretch when we have these, 5 or 6% moves just from the morning to the afternoon as we've had recently. But I think the market's struggling right now to figure out exactly if the probability of a coming recession in the U.S. has increased a lot, a little, maybe not at all. We just don't know that. And then, of course, you have all these dramatic headlines with the European debt crisis. And I think it was also kind of a frustration trade. Psychologically, the credit downgrade of the U.S. Credit rating, as well as the whole deficit debate, just got people a little bit fed up. So that's the psychology surrounding it. But really, pull back a little bit. The broad market is down about 6% this year to date, even though the economy has kind of disappointed in its growth rate. And
almost $2 trillion of wealth has been wiped out.
From the highs, yes.
From the highs of the market. One thing that people are very concerned about is what all of this has done to consumer confidence.
Yeah.
You mentioned the psychological impact. How might that negativity in consumer confidence ripple through the economy and then the stock market?
Yeah, we're seeing multi-decade lows in reported consumer sentiment, right? So when the surveys go out and ask people how they feel lousy. And I think it is because of all these headlines. This sense that, the economy is fragile, and yet governments in the developed world are kind of pulling back and they can't really do much to prop up the economy. However, retail sales have held up relatively well. The actual, what consumers have done, rather than what they've said, has been okay. You look at chain stores like Target, they've actually had a decent summer so far. Back to school seems okay. I attribute a lot of that to the fact that gasoline prices are down maybe 15% from their highs. So that's kind of propping things up. If it snowballs, if people get really fed up, then yes, obviously it's going to be a risk to the economy.
And it becomes an issue more for jobs as well going forward.
Yes.
That consumer confidence in the jobs picture, setting that aside, corporations have $2 trillion in cash right now.
Yes.
American corporations do. They could be spending it on anything, but they've been sitting on it for a year. Is there any chance that they're going to spend it anytime soon on hiring?
Unfortunately, I think that corporate management's conservatism is being validated by all these scary headlines, whether it be the European debt crisis or whether it is the fact that the economy here has struggled. They feel validated in their decision not to actually go out and hire very much. Now, at some point, if they see opportunity, if demand growth actually is strong, they will do some hiring. And I think, you've seen it begrudgingly. The employment numbers have gotten a little bit better. Last month's number really wasn't terrible. It's just not enough to really materially bring down the unemployment rate, which I think is weighing on every consumer's head right now.
More volatility in the week ahead in the markets?
I think maybe the fever has broken a bit, but honestly, it's Europe that matters the most here. If the markets get confidence that the European Central Bank can get ahead of this crisis, then we'll be okay. If not, I think people think we might be in for another 2008. I don't think I'm not in that camp, but I think the market's not going to really wait around to see.
Michael Santoli, as always, we appreciate it.
Thanks,
Thank you.